So till now we have been like looking at the break-even point for a singular products. So now we look at the break-even point when multiple products are given. So the formula that we have been using till now has to be changed a little bit, and then we have to find out a answer. So this is called as multiple break-even point, or we can say that it is break-even point when it's like break-even point when multiple products, we can't sell units, products are given. Okay, so this is a different type of problem. So we have like three problems in this. We'll work out all the three. So we'll start from here. So the question asks these elements. So it is a lengthier problem. So it asks, calculate the weighted average contribution to sales ratio, calculate total break-even sales revenue for the next year, use the graph sheet provided, draw a multi-product PV chart showing the loss clearly. You have to draw two kinds of lines. You are able to sell the products in order of the ones with the highest CS ratio, and you also have to tell a constant mix ratio. Okay, you have to do two charts. Okay, in a single chart you have to show both, and this we'll do later. Comment on the findings, calculate BEP units first, and then find out the weighted average contribution per unit. Okay, so that is what he wants in the next question. Okay, so what we'll do, we will first find out these things. Okay, A, B, C, D, and E and F. E and F we will do separately as a we'll do separately in another question. Okay, we don't need to put all things in one. We will not have enough space in Excel itself. It won't look neat. So to make it look neat, we'll split the question into two parts and we'll work out. So we'll start. So you can read along the cursor. Okay, so they have given a lot of data here. So the data that we want is the most important. The data that we want is the first ratio to be computed is weighted average CS ratio. So the formula for weighted average CS ratio would be total sales revenue. So I think that is quite easy to find out, divided by total contribution. Okay, so earlier we didn't do like this. Okay, what we did is we divided the cost the sales per unit divided by the contribution per unit. On the other hand, when we want in an alternative way, we could find out by sales by contribution, but here we want total. We want for all the units what's their sales and all the units what is their contribution. Okay, so let's find out. Okay, so he has clearly said that skilled and unskilled labor are variable. Okay, material is always variable. Okay, material cost is always variable. So all these four costs are variable costs. So when we deduct, we'll get the contribution. So let's get the contribution. So we got the contribution. Let's get the sales units so that we'll get the total contribution. So we'll multiply this units into the selling price per unit. So this is the total sales revenue for each product. We'll get the contribution. So total sales units into contribution. Okay. So what we want is the total of all these. Okay, we want total of all these. So the total of all the products would be, so this is the total sales and this is the total contribution. Okay. So our formula is total. Okay, I think I've made a mistake. It is total contribution divided by total sales. So that is the formula. Sorry, we have not done that properly. We'll get the answer. Total contribution is the numerator. Total sales is the denominator. Let's get the answer. We got the answer. So we'll get the fixed cost. The fixed cost is this number. So the break-even sales revenue is at this amount. Okay, at this sales amount, the company will make break-even. Okay, it will make break-even. So we can't tell in units because there are three types of products. So we can't tell it units. That's why we are doing it in amount. Okay, so we have done both these things. We have got the weighted average contribution to sales. We have also got total break-even sales. That also we got. The next one is to draw charts. So he's asking you two types of charts. One chart is to just draw the line. Okay, just draw the line. You are able to sell the products in order of the one with highest CS ratio. Okay, or you assume that you are selling it a constant mix. See, constant mix calculation is quite easy. Okay, so first we'll start from that chart. So how do we start with that? So we can get the PV chart data. We already did this PV chart. So from there we will get it and we'll work it out. Okay, so we'll start. Assume that your company sells 0 units. Okay, what would happen when you sell 0 units? We'll have 0 sales income, 0 variable cost, 0 contribution, but our fixed cost will be there. What is our fixed cost? Our fixed cost is 6,40,000. So that will always be there. So the loss will be 6,40,000. When we sell all the units, okay, when we sell all units, then what happens? When we sell all the units, we get a total sales of this much. So we have these numbers. So we can take these numbers and we'll just work it out. So this would be our sales. This would be our contribution. We don't need to find out the variable cost. You can just leave it. But our fixed cost will be the same. It's a 6,40,000 and we'll get a profit. So hopefully it is 6,40,000 or okay, that seems to be 6,40,000. Okay, we'll get the difference. Contribution minus fixed cost will give you the profit. So these are the elements which are important for us. So in 0 units it would be 0 comma okay 0 comma minus 64,000, 6,40,000. So I think we could cut 3 zeros also, and on the other side it's all the units put together. What is all the units? All the units is, you can add all the units, that comes to 68,000. So if you want, we can put the units here. All the units put together, it comes to 68,000. Units. Okay, so for 68,000 we can put it like this: 68,000 units, comma 252. Okay, this is the number. So these are the coordinates that we want. So and we can draw a line. So what we have done is we have removed 3 zeros. Okay, we are doing it in thousands. I think that's what we are doing. Okay, so we will remove 3 zeros because we don't need to okay, only in terms of amount we will remove 3 zeros. I think in units also we'll remove 3 zeros. Okay, we'll have it like this. So the maximum loss is 640. So we have that here, and all these numbers are shown in thousands, so that you have to mention, that has to be mentioned. So units is 68, or you can just have like 68,000. That won't be a problem. See, it's only for your convenience, so we can show it like that. So 68,000 is the maximum units. I think we'll show it as 70,000 units, but scale should be 20,000, 40,000, 60,000 and 80,000. Okay, 80,000 we can show. See, it's all about the scale only here. Okay, so we will have like this kind of scale. So we have to draw a line. Let's get the line now. So the line would be on this this coordinates, okay, 0 comma minus 640. So 0 units is here. 640 should be somewhere in the here. Okay, that's a loss. And the profit was 68,000 units, 2520. So it is 68,000 units. 68,000 units will be somewhere. This is 60. This is 70. So I think this is the correct point. Therefore it becomes 80. And 2520. So 2520 should be here. Let's see. This is 500. 1000. This line is 1000, 1500, 2000, 2500. Okay, so this is the line. So you can see the break even point is this one. This is the break even point. So this is the break even point in units, or you can also put it in sales. See, that's only our wish. Okay, so see, this chart should be only shown in sales. We can't put it in units. Okay, so we'll get the total. Okay, I think we can put it in units itself. Okay, so this is BEP in units. Okay, so at 20,000 units itself, it break evens. Okay, but this 20,000 units is a combination of all the products. Okay, all the products, if it is being sold in a particular ratio, so the ratio is 20 units, 22 units, 26 units. In that ratio, it has to be sold. Only in that case, this break even point holds correct. So now we will see in terms of which product has higher contribution, that we sell first. Okay, and then we work it out. So in that case, we will get the contribution per unit from the above table. This is the contribution per unit. Let's get the selling price. This is the selling price. So our CS ratio will be C divided by S. We sell according to the rank. So rank is, this is number 1, this is number 2, this is number 3. So we first sell these, then we move on to the next one. Okay, so in order to do this, we can't do it in units, we have to do it in revenue. So this line, okay, this line also should have been in sales only. Okay, sales. So sales, if you see, total sales is this number. Okay, just wait. So total sales is this value. So it should be 68,000. Okay, it can't be 68,000 units. It should have been the total sales. So total sales is 88, 40,000. 40,000. We will remove 3 zeros. So it will become 1, 2, 3. It becomes 8,840. So in our scale, if you see, we have to change our scale also. 2,000, 4,000, 6,000 and 8,000. Okay, if possible, we have to lengthen the scale, but I don't think this could be lengthened. So the total sales is 8,840. So we have to show that here. So we'll have like 2,500, or else it will not, we can't draw the graph properly. We will have this is 2,500, this has 5,000, this has 7,500, and this has 10,000. We'll show this as 10,000. So for the first line that we draw, we don't need to much change. Okay, the only difference is it is 8840 comma 2520. So 2520. So this is the y-axis, and on this side you have the x-axis. So it's going to be like this. So 8,000, okay, 800. So the center point would be, this is 75 and here it is 10. So the center point should be 8,250. Okay, so I think mostly it will be around there only. So okay, I think even even when we draw that kind of a line, it will still be there only. So but this is the BEP sales. Okay, BEP sales. So the BEP sales point is roughly, it would be roughly, BEP sales point would be more than 2,500. Should be more than 2,500. Okay, we have to check whether that is right. Break-even sales value was, we have already worked it out. See, break-even sales value is 1,800 if we don't take the zeros into account. Okay. We incur a loss of 640. 640 is correct. 2520 total profit. Okay, again we got the scale wrong. That seems to be the problem. This should be 25. Two more gap. This should be 75. Two more gap. This should be 75, and this should be this point should be 8,250. Okay. Our coordination point was 8,840. So I think it will be it will go beyond our line. Okay, 8,840. So 8,250 here, 8,000 or 9,000 we have to go. So 9,000, okay, would be around, each one adds 1,250. Each box is 1,250. So 8,000, I think this should be 8,750. This is 8,750. So I think we got the idea. Okay, 8,750 or approximately that, we get this point. Okay, so let's see our BEP, is it like correct or not? So this should be our break-even point. our break-even point, see, it is less than this point is 1250. Okay, we are giving a scale of 1250. This is 1250. This is 2500. It is cutting between these two, so it is between 2500 and 1250 units. Okay, it is like cutting around it. So if you take its averagely, you can say that it's in between this, so it is averagely like this. So we can say it's around 1875. Okay, it's around 1875 BP units. Is it right? Yes, it's around here. Okay, so we can't get the exact answer because it's not an exact graph, so we can't get that exactly. So that's about the first line. So we have to draw the second line based upon the contribution per unit. Okay, so we have already drawn a chart based on constant sales. We have drawn a chart. Now we have to draw a chart based on high CS ratio. So we have to start it from here. We'll do it now. So we have to get the second part of the PV chart. So this chart is based on high CS ratio. So we have already computed this. So the second table we have to compute for the sake of the graph. Okay. So first we are going to have fixed cost. Then we are going to sell the product with the highest CS ratio. So it's product right. So first we'll sell this product. So when we sell, we'll first put like what is the revenue, and then we'll put what is the contribution for that product. So the revenue for the product, I think we have to copy it from the earlier numbers. We'll just like paste it here. So we'll start. So the revenue is, we have cut already 3 zeros. So we'll do the same thing here. So it will be 2200. Then we'll take the contribution. So this is the contribution here. So let's get the cumulative of it. The cumulative is this number, the previous number, plus this one. So let's get the cumulative. So cumulative and the total sales will be the same. So we got the cumulative revenue and cumulative profit. So let's draw the chart. We'll take another color. So we'll start here. So the first number would be the revenue. Okay, so the revenue or sales. So if you want, you can also take it as sales. So when sales is 0, the fixed cost, okay, I think we have missed fixed cost. Fixed cost is 500. So it is minus 500. Okay, we have to put the fixed cost here. So fixed cost is 500. So at 0 sales, the fixed cost is 500. So the starting point is same. Now, what's the next point? What's the ending point for this line? The line from here, it moves on to a sales of 2200. 2200. So 2200 should be somewhere here. Okay. And it makes a profit of 700. So 700 should be here. So we'll make the origin point correct. So this is for product C, right? This is for product C. So next we have to do it for product S. So next product S is being sold. Product S is sold at the ending point is at 5720 of sale. So the connecting point would be here. The starting point is here. The ending point is 5720 of sale. So that is roughly 6,000. So it would be somewhere in the middle of these 2 points, right? Because see the difference between here and here, it is 2500. So this should be 6250 and then 7500. So the difference is like 1250. So it should be somewhere here. Okay, so next, what was the sale? Okay, sorry, what was the profit? The profit is 2000. It's roughly 2000. So 2000 profit is in this line. Okay, it is this point. So a 2000 profit and the sales is 5700. Okay, so we can a little bit extend if you want. That's it. And the last one is, so this is product. This is product yes. And the last one is product D. Product D, the total is 2660 of profit. So that is this point. And also the total sales is 8840. So that is this point. So the first line and the last line are like points are almost the same. So we have got the line. So the ending is product D. So you can see here, what's the difference between the first line and the second line? Okay, between the orange, where this is a constant mix. Okay, this is the constant mix. That is, they are sold in a proportion. And here we are selling the first highest PV ratio, then the lowest one, then the lowest one. So usually the product which has the highest CS ratio will be very steep. The product which has a little bit lower CS ratio, it will be a little bit flatter. And the last one, okay, and the last product has like lower profit of CS ratio, so it will be like much more lower. Okay, so why is a constant mix in a straight line? Because it is sold in a constant proportion. Okay, so at any point of time, the product sold here in the constant mix would be in this proportion, 20 is to 22 is to 26, or in a simple way, 10 into 11 is to 13. So they sell in this proportion only. So why do we have this concept? This concept helps us to tell that when we like sell a product which is of higher profitability, okay, we incur a faster break-even point. Okay, so if you see, the break-even sales would actually be somewhere like quite less. Okay, see, if you could see here, the break-even sales has been like 1875. If you use this one, it would, the break-even would be like much more lower. So let's see the constant mix. What was the break-even point? 1800. Okay, 1800. Okay, I think this is 1250. We draw so many lines, we don't know what is the number. That's 1250. So you could see here, the BP sales is almost 1000 units. 1000. If, okay, the break even is occurring sooner. Normally it occurs at a lower point. Now it occurs sooner itself at 1000 units. Okay, so not 1000 units, 1000 of sales. Okay, sales dollars. So this is an important point. So when you sell a higher CS ratio product, it will break even soon than a product which is having a lower break even point. Okay, which has a lower CS ratio, whether it's weighted average CS ratio or individual CS ratio, it will break lower if it has a lower CS ratio, okay, or a PV ratio. So that's about this concept and this sum. We have ended this sum here. So we'll move on to the next problem.